They just want to get reelected at any cost. But behind them are the people of the power elite, the big bankers, the bigger politicians, the really wealthy people who actually control the state from the top. And I think that those people are very deliberate in what they do. They use this generic socialist ideology and this Keynesian framework to manipulate the whole system to their advantage. And the idea of just kicking the can down the road, of inflating the money supply, of continuing the national debt, of getting greater controls and restrictions on the population and on the economy, that's all to their ongoing benefit. It's both evil and stupid in the form of two different classes of people that are essentially have control over our lives.
This is Little by Little with Andy Schectman.
Welcome back, everyone, to another episode of Little by Little. I am very excited today to have with me a senior fellow at the Mises Institute, Mark Thornton, and he is someone who doesn't just watch the system, he reads the undercurrents. And for those of you paying attention, those currents are moving fast right now, and the world is shifting beneath our feet. Mark's one of the few people who can decode it in real time. Let's get into it. Mark, thanks for coming today, brother. Good to see you.
Andy, it's great to be on the program. Thank you for the invitation.
Yeah, man, absolutely. Now, I didn't have this in the questions to ask you, and I know who Ludwig von Mises was. Can you just, in a nutshell, tell us about Ludwig von Mises and what the von Mises Institute is all about?
Well, he was an economist from Austria from the previous century. He's the namesake, obviously, of the Ludwig von Mises Institute. But, you know, in the 20th century, Europe was basically a bastion of socialism, fascism, communism, Nazism. And Ludwig von Mises was really the sole public purveyor of free market economics and what's called classical liberalism. He's the one that came up with modern theories about money and banking and credit and interest rates, as well as he did the initial critique of socialism, saying that rational economics could not occur under full-fledged socialism. And so he was widely berated and people discouraged other people and students from even reading Ludwig von Mises. But when the communism fell in the late 1980s and early 90s, of course, everybody had to come forward and say Mises was right after all. They won't say that about his money and banking theories, but they had to admit that he was right about socialism.
Well, I'd definitely take his theory over John Maynard Keynes, who the West followed, a system that is built on savings, investment, and reinvestment, kind of like the brick house and the three little pigs, is a better system as far as I'm concerned. So those who have been fortunate enough to dig deep into the Austrian theories of economics certainly know who Ludwig was, and won't go any deeper into that. But if you're looking for some good reading, check it out. Read a little bit about the Austrian School of Economics. To me, it always made sense, far more so than what Mr. Keynes had put forth. All right, so Mark, you know, I think it's great, only because I think a lot of what you talk about is the way I look at the world. And let's start with the United States. You know, countries are building ways to trade outside the dollar, right? There's the M-bridge system. And I guess the question I want to ask you is, are we watching the early stages, perhaps, of the United States losing control of the very system they created? And why does it seem that no one in Washington seems even remotely concerned about the things that seem so important to you and I?
Well, those are two big questions. And I think the first one, you know, when we look at money and when we look at the market for precious metals right now, we see, the canary in the coal mine of the United States having lost its way in the 20th century and it coming home to roost in this century. Empires like the United States, it's emblematic that they control money and banking throughout the world. That's part of their power base. And if they abuse that system, as the British did, then they lose their economy and they lose their power and control. And that's kind of what the United States is doing right now. It's the U.S. dollar was the dominant currency. It led the Bretton Woods system, and it was the trading currency, and it still has a dominant role to play as a central bank reserve currency, as a trading currency, but it's clearly losing its control over those power bases, and it's losing them very quickly. I mean, we can see the Chinese making gains across the globe on a regular basis. Countries are trading with each other using their domestic currencies, barter type situations as well. So I think the pace of change, I reviewed a book that was published in 2011 that said the dollar was going to remain dominant for ever and ever because there was no alternatives. And I responded in the review saying to this leading economist that if the United States is going to abuse its position and it's going to abuse the dollar in terms of economic policy and in terms of foreign policy as well, that other alternatives will be coming forward. And that's really what we've seen in the last several years. And of course, nothing more is driving that than spending patterns in Washington, D.C., where they want to spend more and more. They won't even have a budget. They won't even bother to pass a real budget anymore. They don't debate the budget. And of course, so they're spending more and more, and now they're borrowing more and more. The trillions of dollars are racking up. I think we added $1 trillion to the deficit in 2 months' time. And of course, everybody knows and everybody fears the fact that that deficit has to be paid off or at least rolled over. And so, that's a problem. And it's an emerging problem, and people don't trust the U.S. government bonds. But if you look around the world, well, people are also not looking very trustworthy towards British bonds, Japanese bonds. This is a worldwide phenomenon. Keynesian economics, as you said, is a worldwide ideological, political phenomenon. It inhabits the minds of politicians and central bankers everywhere on the planet. And so they're not only moving in the wrong direction from the way you and I think, but they have no conception of reforming themselves right now. There's no indication whatsoever that they're putting 1 ounce of effort into reforming the system, cutting back on spending, getting the budget in balance, issuing less government bonds. None of that is on the table right now. It's just full steam ahead.
Yeah, right. We were closed for 6 weeks and added $600 billion worth of debt to the balance sheet in 6 weeks that the government was closed. You measure that in seconds, it's north of, 23, 24, 25,000 years ago. You mentioned the $1 trillion that we seem to be accumulating every 100 days or so. That's 31,688 years ago. That's 1 trillion seconds. The numbers are getting too big. And you're right. Who would want to hold a treasury from a country who has such fiscal irresponsibility and can weaponize it against you, take it from you if we don't agree with what you're saying? And you look at the world who sees we invaded Iraq 22 years ago under false pretenses. We're still there after destroying the country and toppling the regime. We're still there occupying it. And the way that we took Russian Forex reserves or treasury reserves and kicked them out of the SWIFT system, I guess the idea is that the reserve currency the moral high ground reserve currency should not be judge, jury, and executioner when, by much of the world's perception, we're no better than they are. I'll leave that debate for another time, but I think your point is well taken. So let's move on a little bit and talk a little bit about gold. Central banks are hoarding. We've been talking about that for the last 5 years. That's well documented. One of the things that is new and different are the massive deliveries coming into COMEX every single month. Again, here in December, huge billions of dollars worth in the first 3 days of the December contract, which went off the board on the 28th, the day after Thanksgiving. And that whole Thanksgiving CME server getting overheated, that's a whole nother discussion as well, talking about gold. But anyways, these are the most well-capitalized, best-informed players on the planet, those that are bringing all this metal into COMEX. At the same time, you've got Michael Hartnett, the lead analyst for Bank of America, who has a very, very, very expensive newsletter that goes to the institutional traders, saying that 25% of your assets should be in gold right now. You have this chief investment officer of Morgan Stanley, who said sell half of your bonds, put 20% of your money in gold, because it's the 60-40 platform that Wall Street has used forever. Sell half your bonds, 60-20-20, he says, 20% in gold. And maybe the craziest of all is Jeffrey Gundlach, the bond king, who is saying 25% gold is not overweight. So you got all of these people talking about gold. You got big money bringing money into the COMEX market, and the central banks have been hoarding it for a long time. Meanwhile, the public is all in on equities. My question to you is, with that backdrop, do you think gold is quietly being revalued behind the scenes while everyone is still asleep and herded in the wrong direction?
Well, I think there's certainly smart money out there. And I think a lot of people haven't caught on. I think the average man on the street has not caught on to what's going on. They're looking at their 401k 4 times a year and they're happy, and they're not even thinking about things. They're not even looking at the world around them, more or less, what's going on in Washington, D.C. and around the globe in terms of foreign policy, the arrogant American foreign policy that we're seeing all the way back to Iraq, but in Venezuela and elsewhere. That's a very aggressive type of foreign policy. So I agree with your points on that, and it's not fantasy that we invaded Iraq about the same time Saddam Hussein was talking against the dollar and wanting to make trades outside of the dollar nexus. So we know that that's really, really important to the U.S. government, obviously. But, I think the smart money is moving into gold. I think, I think they're getting ready. They're looking at not at 401ks, but they're looking at vast holdings of stocks. They're looking at the vast run-up in stocks, in AI stocks and technology stocks. They're looking at a 16-year run bull market in stocks, and they're starting to see the cracks in the system that I see in terms of the stock market, the risks and the threats that it faces. The way I see it is I can't tell you what swan is black, but it certainly seems like there's a lot of swans out there right now. And so, they're prepared. They're already pre-prepared into gold, whether it's the central banks or the big financial houses. They're already moving in that direction. And I think it's, the smart, long-time silver stackers, the accumulators and that sort of thing that are prepared. But I think the vast majority of Americans are not prepared for a downturn in the stock market. And what I anticipate happening is that when the stock market turns down and starts showing negative returns, the bull market ends, I think there's going to be, people are going to look around and they're going to say, hey, the returns on gold have been great. The returns on silver have been fantastic. The cost of production for gold and silver miners is far less than their output is. And so I think there's going to be a lot more money coming in that direction, into all of those markets. And when we approached $50 on silver, when we approached that historic price high in the silver market of $50, I was talking about how we're going to experience growing pains. And the growing pains essentially are more of the smart money, more of the traders, more of the machines coming into the market for precious metals and becoming active there where they hadn't really played any role whatsoever. And those growing pains, I mean, it's not like a teenager with sore muscles. I think we're in for some really, well, we've already experienced a lot of volatility. We've experienced backwardation, the crazy things that have been going on in the COMEX and the LBMA, with silver flying around the world and cooling units mysteriously shutting down. I mean, I didn't envision all of this chaos, but I certainly thought, there would be more chaos, at least in terms of price volatility. And I think longer term, I think we're going to see an entirely different wholesale marketplace. And we're going to be moving from one that was very tightly controlled by a very small number of players. And I think that as the silver market in particular, which is very small, I think that as more and more interest and more players go into that market, I think we're going to see some revolutionary changes.
Yeah, I agree with you. Speaking of silver, U.S. now calls it a critical mineral. They just reclassified it. The EU did it in 2023, and now China, in retaliation, is curbing exports. What's your take geopolitically, strategically, financially? What do you think about silver being classified a critical? The U.S. government maybe just put a floor under it, policy floor, strategic, national security floor. What's your take?
Well, I've always considered silver a critical, important metal as well as a precious metal, and I've been chastising the environmentalists for their policies, which have diverted a large amount of silver into solar panels and electric cars and windmills and all of this stuff, because that silver that's being taken out of the marketplace, it's going to be very difficult to reobtain it and recycle it. And so, this is silver that may be lost on humanity forever. And I think that silver should be more highly valued because of its physical properties, the amazing things physically that it can do and does do for us in terms of electronics and computing technology, battery technology, and all the rest. I think that we're going to learn more and more over time about the importance of silver, and it doesn't exist in unexhaustible quantities. I'm usually the last person to be worried about exhausting a natural resource. But in silver's case, when I see electronic components being tossed into landfills, that somehow irks me much more than anything else. And so I'm definitely worried about it. And, labeling it a strategic metal, I think that's fine. We used to have stockpiles of silver in the United States, very large stockpiles. It used to be money, and we used to, have large stockpiles of it. But I distrust the government, in terms of what they want to use the silver for, because I think it has a lot of great uses for humanity, and I really dislike the idea that it could be used for weapons or military purposes, although acknowledging the fact that it is and it can be. I'm sure it's being used in drones, and drones is the military of the future. But in general, I think we all have to acknowledge that it's a strategic metal, it's a precious metal, and moving forward in human economic development and our standard of living, that silver is going to be of the utmost importance forever.
Yep, I agree with that. And it's also depleting in nature. Was 16 to 1 silver to gold ratio forever. Now it's 7 to 1. It's becoming harder to find. Let's shift gears a little bit. I've done over 3,000 videos on the BRICS, and many of the people that I respect and follow, including the mainstream media, that's a little bit outside that camp of respect and follow, but they all seem to dismiss the BRICS. But now the BRICS are settling energy outside the dollar. They've built, and it is now operational, Bridge. We've talked about this. I've talked about this ad nauseum. They're all stacking gold, amongst many other things. They are setting up payment rails that seem to trigger or seem to use gold as a settlement vehicle. But forget about gold. In terms of the BRICS altogether, what is it that the West isn't seeing? What are we missing um, in terms of the legitimacy of the BRICS? What's your feeling on the BRICS?
Well, I think the reason we miss the importance of the BRICS and the so-called threat of the BRICS, I don't see the BRICS as being a threat, but from the position of the United States and the dollar, it is a threat. I think the reason people don't place a high value on that is because people have such high time preferences. They think that, well, if you form an organization, you just go out and do something automatically and it's a done deal. And that's obviously not how the Asian mindset works. It's not how the Chinese mindset or the Indian mindset work. They're in it for the long haul. They do things in a step-by-step method. They're very careful. They don't want to take 2 steps forward and then have to take 1 step back. They'd rather take 1 step at a time. And so I've dismissed these critiques, even on our side of things, about the BRICS not being a threat, because I think that they're planning this out, they're developing it. Now it's coming to fruition. It's not coming into fruition the way the Western mindset sees things, because they do things in a step-by-step method. The Chinese population, the Indian population have large gold holdings. The Chinese government now has very large precious metal holdings, and a lot of that is not even subject to public review. And then now they've set up these gold vaulting systems in agreement with people around the world. See, they are doing things the way foreign policy is meant to be done, and that is in terms of coming to a common goal and a common solution with other countries around the world. That's the way they do things. They're doing that in Central and South America, in Africa, and obviously in Asia as well, and with the Russians. And that's how they do things. And the American mindset is, no, we just have our way. We just demand that this country do this and that country do that. It's kind of President Trump's mindset. You either do what I want or I'm going to punish you. And the Chinese, they don't use that approach. They play the long game, and I think that the success of the BRICS moving forward in terms of their financial importance and the role of the Chinese currency in international trade and as a reserve asset, I think all of that is moving forward. And they are going to be there, and they are there to pick up the pieces when the United States and the West falters. And so I think that as our precious metal markets are chaotic and falter, I think that only gives the Eastern, in particular the Chinese and the Shanghai, Hong Kong markets, more latitude to take a bigger role. And that's really what they want. They're not looking to have that global complete dominance over everything, but they do want to have a dominant or leading role in finance and international trade. My God, they're the biggest economy in the world, and their increases in international trade are quite remarkable. And so, the early critiques of BRICS, I think, reflect this high time preference in the American mind and the arrogance of the American and European thinking on these things that you should be the monopolist rather than just a competitor.
Right. And instant gratification isn't fast enough. And you're right, they do things step by step or little by little and then all
Yes,
at
little by
once.
little.
Yes. And I see that everywhere, logarithmic decay, little by little, and bang all at once. And people dismiss the little by little because it isn't fast enough. And in a world where cryptocurrencies and Nvidia and Apple move up so fast and so quickly, I guess we've all been accustomed here lately to things moving at a much faster clip. You talk about many things, not just gold and silver or the BRICS, but I notice you talk about things like the banks and the bonds and the yen carry trade and things like that, even the disconnect between derivatives and physical commodities. So I'm going to ask you, if something were to break first, where do you think it breaks? Would it be the yen carry trade, maybe the repo fragility in the banking system, bond market stress, or as I mentioned, like we've seen lately, this massively growing disconnect between derivatives and the physical commodities that are supposed to stand behind them in a massively rehypothecated market? Which one of these, if any, keep you up at night?
Well, that changes, unfortunately, to be honest. But the one thing that I do know is all of these financial fragilities emanate from central banking policy, where they've inflated the money supply, they've created low interest rates, and they've encouraged overinvestment and the overissuance of debt, and that naturally finances leverage. Like with the Japanese carry trade, very worried about that and what they're doing in terms of the interest rate on their long-term government bonds, the price of their bonds, and the melting away of the Japanese carry trade. Some of it's already gone, some of it's still remaining. So there's like a dozen different things out there. That's why I said there's like a flock of of swans out there right now. And the central bank, I can tie all of them essentially to central banks around the world with this multi-decades of increasing the money supply and ultra low interest rates. And the what makes a black swan is simply it's the first thing to break. And so it's very, very difficult to identify which of these financial structures is going to be the first one to break, essentially. We don't really know that. Even the people who are in control of those things, so the people who are in control of, things like corporate debt and things like commercial real estate, even they don't have a good full picture of things. And, the private equity, that's all covered up. We don't have a lot of great information about that, as well as the yen carry trade. So these are all in the dark crevices compared to the spot price of physical metals or, the price of listed stocks on the stock exchange. It's much more akin to things like mortgage-backed securities and collateralized debt obligations. There's a lot of murkiness out there with those assets from the housing bubble, but nowadays there's a whole host of things to choose from, and we can imagine that even things in the precious metal markets could have it. There were some theories out there about how they could have tremendous negative consequences for the big banks who are overseeing and controlling these markets. And as a result, you could end up with banks losing, I don't know what the numbers would be, but billions and billions of dollars. And that might be just enough to upset the apple cart to set off a chain reaction. And I was listening to Bloomberg radio on the way to and fro from a Florida vacation. So I ended up listening to way too many hours of Bloomberg. But all of the guests that they interviewed came on and said there's no possibility of any kind of contagion in the markets these days. And I just had to laugh that they were all in agreement that there's no way you could have any contagion in the marketplace, because I think that's
a bunch of horse phooey. Just like Bernanke said, the subprime crisis is contained. I mean, that's just a bunch of nonsense. That recency, normalcy bias could be the death of us. I think I agree with you on that one, and I like the fact that there are very few people that I meet that aren't directly involved in this industry that have an open mind. I mean, I guess that's silly to say when you're at the Mises Institute, but I like how broad your scope is on things. And that's, when we talk about people who are smart versus intelligent people might be really, really intelligent. Maybe they just read the wrong stuff, where smart people have the ability to, in my mind, change their opinions by reading or looking at a different ideology. I like someone who has an open mind like you on all of these things. And you're right. A lot of it is unknown. Speaking of unknown, the Genius Act. Okay, and that's something that is now a dollar-based stablecoin. I'd like to get your thoughts on that. And I guess just a question would be: do you think this is unintentionally fast-tracking the end of U.S. monetary dominance, that being all of the dollar-based stablecoins and the Genius Act? If you know much about it, I'd love to hear your take on it.
Well, it's not my area of study or specialization, but I would say up front that studying Austrian economics and the economy from that perspective teaches you, really enforces upon you the whole idea of humility, the whole idea of how much we don't actually know, and how much of what we see is dependent upon the work of and knowledge of so many other people. And when I first heard of this show, in the title, Little by Little, it reminded me of a talk that I gave recently in Florida. And the whole theme of that show, of my talk, was that everything good in this world comes from the bottom up. It starts right at home. It starts right in the household. It starts right at the company down the street, the employer, organizations at the local level. That's where things get built up. That's where the savings come from. That's where the ideas come from. That's where the labor and toil comes from. And that everything from the top down is problematic. And we know that instinctively. I mean, that's sort of ingrained in us, that things from the top down are things that we don't like, but things from the bottom up are sound and stable. And so, I like the name of this show for sure. Now, as far as the Genius Act is concerned, Washington has gotten its hands in thick with everything crypto, basically. The original advocates saw cryptocurrencies and Bitcoin as a way of replicating the conditions of the gold standard, that you had to mine for something, that you had to use real resources, that it was separate and distinct from the government, that there was a limited supply, that everything was independent and private, and so on and so forth. And I loved it. I talked about it a great deal when it first hit the scene. But now we've seen the inevitable, role of government coming in here, and the industry, accepting it, basically, where It's now highly regulated and taxed. And now it's, in these recent iterations, it's becoming a big source of demand for government securities. I mean, if that, the original founders, I'm sure, would be up in arms at the idea that somehow the crypto industry has been co-opted by Wall Street, which it was the founders of crypto were against, Bitcoin was against, and the government debt and the bloated economy and government regulation, all of these things, paying taxes on your gains from Bitcoin. It's really had the unfortunate misfortune, really, of being dragged right into the system that it was meant to deny, that it was meant to stand up to. And so, and now who knows, it could be, a stepping stone on the way to a government crypto system, basically a central bank digital currency replacement idea. And so it's very unfortunate, the way things have gone. And I did a lot to talk up Bitcoin when it originally came out and to tout the underlying values of the people who originally put it together and the reasons that they saw in the bailouts of the housing bubble and the financial crisis. The reason they started in the first place and the unfortunate direction that it's gone in recent years.
Yeah, it's funny. The CEO of USA Tether, who is going to be one of the primary benefactors of the Genius Act, is a man named Bo Hines, who was Trump's crypto czar through August. Now he's benefiting from the rules that he implemented. And one angle that I think people should dig into, I've done a lot of digging into, talked a lot about it, is that the synthetic demand, as you mentioned, for the treasuries, that the interest on those treasuries is not transferable. What is USA Tether doing with the interest? Largely, they're buying gold. They have 14 billion in gold already, and we're just at the Beaver Creek Mining Summit, dealing directly with the miners. I find it very interesting. Now, you could go down the road there that I have, but something for your own. Next time you take that trip, dig into that a little bit. It'll bring you down a hole that's very, very interesting. Um, you know, Look, I have one last question for you, and I appreciate your time and your candor. A lot of people talk about maybe we're heading into a reset. Other people say it's just a new system. You mentioned the stable coins are like a CBDC. Well, it is like a CBDC in masquerading as a stable coin, even though it's not issued by the government. Certainly the legislation behind the Genius Act has tremendous amount of oversight by the regulators controlling the on-ramps and the off-ramps. I think you're on to something there. Um, the last administration, I would often say their actions were too stupid to be stupid. Stunning incompetence, if you will. So the last question I have for you is, you've watched all of this unfold just like I have in real time. The missteps, the policies, the blind spots. Do you think that this is perhaps just a string of catastrophic errors, or is there a deeper, more deliberate, too stupid to be stupid unwind happening here? And I'll leave you with that last question.
Well, that's the perennial question. Are politicians and government evil or are they stupid? And of course, governments are made up of lots of different people. And I think you have a combination of both of them. I think the people who are playing the front man in all of these scenarios, they're typically the bumbling, stupid sorts that does make mistakes and doesn't understand their own policy relevance. They just want to get reelected at any cost. But behind them are the people of the power elite, the big bankers, the bigger politicians, the really wealthy people who actually control the state from the top. And I think that those people are very deliberate in what they do. And I think they may have a personal ideology themselves, but they use this generic socialist ideology and this Keynesian framework to manipulate the whole system to their advantage. The whole idea of getting us into this situation has benefited them enormously. And the idea of just kicking the can down the road, of inflating the money supply, of continuing the national debt, of getting greater controls and restrictions on the population and on the economy, that's all to their ongoing benefit. They're not playing a rear guard action. They're making money. So I think it's both evil and stupid in the form of two different classes of people that are essentially have control over our lives. And so I think that's my current answer to that perennial question. And Hayek's actually great question of why the worst always get on top.
Yeah, that's interesting. I'll have to dig into that. I've read him a long time ago, but I've read all of the Austrian economists, and I think people should too. If you want to have a different view on the way the Western system is, and maybe a different, fresh take, check it out. It's very interesting.
Well, Andy, I wanted to promote this book by Hayek. It's a collection of his greatest hit articles, and we're giving away copies to whoever puts something in the comments or calls the Institute. We'll send you a free copy, and we also you can also download free copies of the book. But it's a short book with some of his best articles, and mostly about money. And Hayek was Mises's student who won the Nobel Prize, and he was the ideological flag bearer in the 1970s and early 1980s, fighting inflation back then, trying to get us back on the gold standard. He was the intellectual, ideological backbone for people like Ronald Reagan and Margaret Thatcher. And I know we didn't make it back to the gold standard, but Hayek is one really smart dude.
Yeah, he would have been a fun guy to drink a glass of scotch with and talk about the world. Let me tell you, those are the kind of discussions I dig very much. How can more people find out about what you're doing and what the Mises Institute is offering? How can more people get informed?
Well, it's mises.org, and we have 5 different podcasts. We have books that you can download for free. We have daily articles galore. We have audio and visual lectures about everything about economics and everything in the Austrian school, including a lot of libertarian commentary on, current events and policies. So it's really, you can get anything here. We have the largest economics webpage in the world, one of the most trafficked. It's all written for the general public. We have lots of events for the general public as well, and it's almost everything is for free. There's no, registration required or anything. So I would encourage everybody out there to check us out, go load up mises.org and see what we're all about.
Yeah, I echo that. You don't get many things for free nowadays. Something as especially something as important as taking a different look at the world, maybe through a different lens. Anyway, but I really do appreciate you coming here today, and I'd say I'd love to do it again with you down the road. And we'll see how everything shapes up and plays out with the BRICS and this administration and the CBDC, or shall I say the stable coin and all the stuff we talked about. But I really do appreciate you coming in today, and want to wish you, your family, everyone at the Mises Institute, and everyone out there, happy holidays, happy, healthy New Year. And thanks, Mark. We'll do it again.
Thank you, Andy. It's exciting times ahead.
Absolutely. Thank you.
This is Little by Little with Andy Schectman.